Welcome to my morning report. Chart appraisals on Friday the 21st of April with me, Richard Romark, analyst at Hantec Markets. We've got the final day of trading in front of this French presidential election on Sunday. It's fairly quiet, fairly flat, nothing too significant in terms of direction. Markets is sort of broadly consolidating in front of this election because of the outcome is so uncertain, really. But it's interesting that we've started to see French-German yield spreads tightening once again. In the last few days, the French-German yield spread has tightened quite significantly as the French OAT's yield has dropped back to the lowest since January. German yields have always risen as well. That would suggest a more positive risk appetite in light of this French election. That comes as sort of expectations remain that Emmanuel Macron is still going to be coming out probably as the leader in this first round runoff. Him going through to the second round generally would be seen to be a market positive move. He's likely to be the winner in a second round runoff, so if he does get through, that would be market positive. Le Pen is still deemed to be the sort of favourite to come through with him. However, you've also got the likes of Fillon and Mélenchon as well to add into the mix. So there is still an element of uncertainty in this Paris terrorist attack that we saw last night. I mean, it's uncertain as to exactly how that's going to play out with the 30% undecided voters in France. However, at the moment, the markets are taking it fairly positively. The euro is mildly higher against the dollar today. It's interesting that we've just seen the sterling falling away because we've just had the UK retail sales data. Let me show you that data. UK retail sales data, which has come in quite significantly worse than expected, falling 1.5% on the month, and also for the year-on-year data down to 2.6%. From 4.1% growth last time. That basically reflects the struggles that the UK consumer may well be having now, increasingly with this inflation data that has been picked up quite strongly since Brexit really started to sort of bite, and that is sort of having an impact on retail sales. So sterling has fallen away subsequently to that, and that is sort of helping to sort of mean that sterling is an underperformer on the day. So in terms of what we've got to look forward to today, other than a bit of market consolidation, we've got a bit of data this afternoon, a bit of Canadian inflation and the flash PMIs for the States. The flash PMIs came out this morning for the European countries, and they've all been pretty positive, haven't they? Pretty much across the board. Strong numbers out of France. Look at that manufacturing beat, 55.1 on the French, and also the composite improving as well, better than expected. The Eurozone data generally pretty strong. And then into the afternoon you've got the Canadian inflation, which is expected to just dip back slightly to 1.8% from 2%. But also we're looking out for the the PMIs, flash PMIs for the States to remain around about where they were last month. So that takes me to my chart today, which is Euro Yen. Now, Euro Yen has been sort of rallying in the last sort of few days, but hit the buffers yesterday in the wake of that terrorist attack in France. It's just started to come off a touch in the last few minutes, actually. Hit the underside of that old downtrend, interestingly, and also the old uptrend as well. Two trend lines coming together. That uptrend that's been in place since June last year. The underside of that is the basis of resistance, and also the basis of resistance being that downtrend that's been in place since sort of early mid-March. So those are two levels that the market are looking out for, and again sort of failing a little bit at that trend line, or those trend lines yesterday, is not added to sort of any sort of further bullishness in this recovery. The momentum indicators are positive. Stochastics rising, MACD lines are about to cross higher, RSI back to 40. It's a positive move, but this initial reaction today has started to sort of see a bit of traction to the downside. We've broken this 4-day uptrend, and that 4-day uptrend has now become the basis of resistance this morning, and you've sort of broken back below that 116.95 breakout level. 116.50 is a pivot line on this chart. An old resistance became supportive in this little base pattern. So that is your key level to watch out for, 116.50. If you break that to the downside, I think the market is looking increasingly corrected. Hourly momentum just deteriorating away, isn't it now? The hourly RSI VAX at low 40s tended to be supported around 50 in that rally higher. MACD lines just again turning lower. So it is seemingly as though that this little recovery is running out of steam. The trend is your friend on this one, certainly seems to be. And I don't know whether that is now the end of that recovery phase, but 116.50, 116.30 is an old key level as well, so it's seen on the daily chart, so it seems as though 116.30 to 116.50 is a key basis of support to watch out for. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.